Tax 2026. What Nigeria's new tax law means for you. Intro. Approximately 1 to 2 minutes. Host warm, conversational. Hello and welcome to Finance Daily. I'm Ferdinand Amicons, and today we're diving into a major shift in Nigeria's tax landscape. Starting January 1, 2026, new tax laws recently signed into law will begin to take effect, and they bring both reliefs and new obligations for individuals and businesses. In this episode, we'll walk through the key changes, what they mean for you, what you should be doing now, and answer some common questions. So whether you're an employee, business owner, freelancer, or simply curious, this one's for you. Brief teaser, some highlights. If you earn under $800,000 annually, you'll pay zero in personal income tax. Digital assets will now be taxed. Companies will face a new development levy, and there's a new unified tax agency coming. But there are also misconceptions. We'll clear those up. Segment 1. Background and why the change. Approximately 3 minutes. Host. Let's start with the background. On June 26, 2025, Bola Tinubu signed into law for acts collectively referred to as the tax reform bills, including the Nigeria Tax Act 2025, the Nigeria Tax Administration Act 2025, the Nigeria Revenue Service Establishment Act 2025, and the Joint Revenue Board Act 2025, PWC+3 Trusted Advisors Law.com+3 EY+3. These reforms respond to long-standing challenges, low tax to GDP ratio in Nigeria, overlapping tax statutes, administrative burdens, and a need to broaden the base and simplify the system. Templars Plus to PWC Plus to the effective date of the 1st of January 2026 gives taxpayers and businesses time to prepare. Eng.Anderson.com+1. It's a big milestone, the most comprehensive tax overhaul Nigeria has seen in decades. Templars Plus 1. Segment 2. Key changes for individuals. Approximately 4 minutes. Host. Now, let's look at what changes for you as an individual taxpayer. First, the personal income tax threshold. Under the new law, the first $800,000 of annual income is tax-free. Nairametrics +1. Then, progressive tax rates apply above that. For example, earnings between $800,000 and $3 million may be taxed at 15%. Higher brackets go 18%, 21%, 23%, up to 25% for very high earners. Africa Check +1. A new rent relief deduction replaces the old consolidated relief allowance CRA. You can deduct the lower of 20% of annual rent paid or $500,000. RAMCO.com+1. Digital assets. Previously somewhat in a gray zone, the new law clarifies that digital assets such as crypto and NFTs are taxable. Africa Check filing obligations. Even if you earn below the threshold, you may still need to file a return or ensure records are kept, or you risk being assessed under a presumptive tax regime. Nairametrics fractal takeaway. If you're earning modest income $800,000, you may be relieved of income tax, but keep records, file as required, and claim deductions. If you're earning more, take advantage of deductions and plan early. Segment 3. Key changes for businesses. Approximately 4 minutes. Host. Turning now to businesses. Major changes here too. Small companies turnover up to $100 million and fixed assets not exceeding $250 million are now exempt from company income tax. Capital gains tax CGT and the new development levy, PWC+1. A 4% development levy replaces a number of smaller levies for most companies except certain small ones. Africa Check value-added tax VAT remains at 7.5% despite earlier proposals to raise it, but the list of zero-rated goods, services is expanded to include basic food items, educational books, tuition, exports outside oil and gas, etc. Punch newspapers +1. The new laws established the Unified Nigeria Revenue Service NRS, which replaces the old Federal Inland Revenue Service FIRS, aiming for better coordination of tax administration across federal, state, and local levels. Trusted Advisors Law.com+1. Foreign, non-resident companies and digital businesses are more clearly within the tax net. Rules for significant economic presence, digital assets, etc. Africa Check practical takeaway. If you run a small business, you may benefit from the new thresholds and exemptions, but you still must maintain proper records and get ready for new compliance rules. Larger businesses should evaluate the new levy, VAT scope, digital operations, and adjust tax strategy accordingly. Segment 4. Common misconceptions and what to watch. Approximately 3 minutes. Host. There are also some misconceptions circulating, so let's clear up a few. The claim that everyone earning above $800,000 will pay a flat 20% tax from 2026 is false. The system is progressive, not flat. Africa Check. Some believe that will automatically increase to 12.5%. No, For now, that remains at 7.5%. Punch newspapers. Many may think digital income is safe from tax. Not anymore. Profits from digital assets are now taxable. Africa, check what to watch. Act on now. Update your payroll tax systems if you're an employer to reflect the new rates and thresholds. Review your deductions, especially rent relief, contributions to retirement, etc. Ensure businesses maintain clean financial records, especially small businesses eligible for exemptions. If you deal in digital assets, check your transactions and consider tax implications. Stay alert for the government to publish the regulations and commencement order gazette so you know exactly when and how things apply. Segment 5. What this means for everyday Nigerians. In closing thoughts, approximately 2 to 3 minutes. Host: so what does all of this mean for everyday Nigerians? Relief: if you earn lower income, you'll benefit from income tax exemption up to 800,000. Essentials being zero rated means relief in cost of living for basic items. New responsibilities: tax compliance is shifting, more people must file, keep records. Claim deductions is no longer automatic, only via employer. Business environment: tax reforms could improve business climate, simplify compliance and encourage small business growth. But for larger entities and sectors interacting with digital asset space, the tax burden may shift. Transparency and fairness: with the unified tax agency and clearer rules, the hope is fewer overlaps, fewer weird levies and more predictable tax obligations, though the transition will take effort. Closing: change isn't always comfortable, but being prepared is half the battle. If you are an individual taxpayer, update yourself. If you're a business, start your tax planning now. Talk to your accountant, and we'll continue to monitor the rollout of these reforms, including the regulatory instruments, commencement orders, and how things play out in practice. Thanks for listening to Finance Daily. If you found this episode helpful, please subscribe, leave a review, and share with anyone who might benefit. Until next time, stay informed, stay prepared,